But now, okay, it should be expected to gain even more strength.
We're technically, we're still expecting it to break the current high that it has and then make another higher high. You know, but if it's not able to break that high, then we'll see the euro coming down. That's technically. But from the economics point of view, the Greece economy is actually going to determine what happens to you in the long run.
Okay, so basically the euro has always, can I safely say, an inherently strong right from, before this US debt crisis started?
Like we know, the US economy has been very weak.
Well, so has the economy in Europe.
But if you look at it on the long term, the US economy has been really struggling with debt crisis and all that. So that's not really gone away. And so when you have a little weakness on the other side of the currency, or sorry, a little strong on the other side of the currency, you see the weakness of the dollar really showing.
Okay. Yeah. Okay, let's go straight into what we're doing today. Okay. We're starting off with Fibonacci. That is an analysis tool. We've talked about the candlesticks, we've talked about the moving average and all of that, but
now, when you watch a lot of the tools we use in the currencies market, a lot of them have names that are derived from people's name. You understand? Because even
people who invent a particular
if in sciences, if you check botanical names, they are created from names of people. In the same way, a lot of the tools we use, apart from very few, most of them are from people's name. For instance, you have what we call Bollinger Band. It was created by a man called Bollinger. You understand? So, in the same way, Fibonacci is the name of an Italian mathematician whose name is Leonardo Fibonacci. He was able to come up with a sequence of numbers which he noticed it's like almost in everything in nature. Those sequence of numbers, traders took it eventually into the currencies market, but it was actually in nature. And if you look at let me give you some typical examples, of those. If you look at your hand, for instance, the arrangement of your fingers is a Fibonacci sequence. Because the Fibonacci is not just those numbers, it's the ratios that those numbers form. So if you have 1, 1, if you add 1 and 1 together, it gives you 2. If you add 2 and 1, it gives you 3. 3 and 2 gives you 5. 5 and 3 gives you 8. 8 and, you have what we call that Fibonacci sequence, those numbers. As you add in the previous one to the next one, you get what we call Fibonacci numbers. Then if you do a division of those numbers, you get what we call the Fibonacci ratios.
I believe that's what we have on the screen right now. The
human hand is a Fibonacci sequence. So, and if you check flowers, also been discovered that the petals of different flowers is also a Fibonacci sequence. Typical example, a butterfly cup flower has 5 petals. The turkey has 21 petals. Different discovered.
We have that on the screen.
It's right behind you. Constantly, flowers have Fibonacci numbers as number of petals.
I need to get this straight. When you say Fibonacci numbers,
those are the numbers.
The petals.
Is that 1? Is that 3? Is that 5? Is that 8? Those numbers. Nothing between. Flowers will never have petals with 7, because 7 is not a Fibonacci number.
Or are we talking odd and even numbers? That is
no. The core Fibonacci numbers, not other Fibonacci.
Because I'm trying to break it down to the various Fibonacci. Okay, tell us more about this Fibonacci.
It's also discovered, for instance. You see, just it's like an observation. You discover that in nature. Typical example, our facial ratios, the height from your head to your eyes, from your eyes to your nose, from your nose to your mouth. It's a Fibonacci sequence. And the truth of the matter is that the more closer the ratios are to Fibonacci, the more beautiful you are.
Oh, really?
Yeah.
That's interesting.
So that's why all those things are in nature. Fibonacci was able to discover it, and that same sequence has been discovered to work in the currencies market also. Typical example, discovered that when rabbits mate, if you put 2 rabbits in a pen right now, every month, at the end of every month, because rabbits produce every month, at the end of every month, the number of rabbits you're going to see in that pen is going to be a Fibonacci number. So these things are constantly in nature. I think I have it there. These things are constantly in nature, and you have those. What this does is that when you see the fact that this is happening in nature, it gives you confidence as a trader to know that these numbers are not, or these ratios are not just gotten from space. There are things that nature supports.
And it has worked. I mean, I want to believe that Mr. Fibonacci, after he came up with this theory, he applied it to the currencies market.
No, not to the currencies market.
Oh, the
theory is just generally for study of nature.
Who decided to take that this
Actually, I don't know
theory?
I don't know who did that. But
has it been? Okay, just tell us how it's been applied to the market.
Let's look at it in the currencies market, for instance. If you look at if price makes.
What particular slide?
Now, what we're looking at right now is that well, I'm not actually using the currency chart. I'm just using a simple illustration.
Okay.
If you look at price going in that place where I have the uptrend, price went up there. The way price moves is that people are expecting that when price goes up, it's supposed to have what we call a retracement. It's supposed to come down, pull back, before it pulls back up or totally comes down. It's been discovered that when price pulls down, it normally gets supports at Fibonacci numbers.
Okay, before completely going,
before either down, going back up or going back down.
Okay.
Yeah. So what that does is that it gives traders ideas of where price will probably turn.
And has it worked every time?
No, it's just like you can't have somebody that has the perfect Fibonacci.
Yes, but is it reliable enough for a trader to actually put it as part of his?
It's very reliable for a lot of traders. A lot of traders use it, and so it works. It's one of the most reliable tools that traders use to trade. It's because it doesn't tell you buy now or sell now. It gives you an idea. A typical example: if a pilot is flying a plane, for you that you are just a passenger in the plane, you don't know that they have radars that they use for flying. They have invisible things that they use for flying. Sometimes you wonder how do they locate airports and things like that. It's because they are invisible, like Fibonacci numbers, in sort of quote unquote invisible that pilots use, to land. I don't mean pilots use Fibonacci.
Not exactly invisible. If they have their radars, they have the guys down
the
runway who
when you look at the currencies market also, it's like it's invisible. But when you plot it, you begin to see those Fibonacci numbers.
Okay.
Because if you don't plot them, you don't see them. You have to plot it, just like they have to plot radars, for them to see it. So you have to plot it on your chart, then, you see it in the market. So that's basically what it's used for. It's used to detect support and resistance levels where price will probably turn when it does a retracement.
Is there a success rate? Do you have a success rate for this?
I can tell you categorically, Fibonacci in terms of predictability, is about 70% accurate. The most important thing is
not too volatile and okay, continue.
The most important thing is that you also need to understand how to sort of interpret it, to see it work. You understand?
And I want to understand that's part of what Alpari teaches. Some of it.
Sure.
Is it part of the basic course, or is this an advanced?
Well, in the advanced class we teach it more. It sounds advanced, but it's not really advanced. In the advanced class we teach, it in a more advanced way. But basically, it's what we're talking about right now is basic. If you check, there are two sides of the way Fibonacci is used in the currencies market. You use for what we call retracement levels. And we also have what we call extension levels. When price is going in an uptrend, it pulls back, then it has an extension. That extension level also, where you are predicting where price is going to go higher, Fibonacci is also able to tell you precisely where price is going, before it comes down again. And what this does is that it gives traders opportunity to put their take profit or stop loss. If you look at it, you see price move from A to B, you can see that. Then it pull down to C. I can tell you categorically that point C might actually be a Fibonacci level. But for you to predict that when price is going to go higher, where it's actually going to turn. You can see those ratios, 0.618, 100, 1.618. Those are Fibonacci ratios. And it tells you where you actually can take your profit or put your stop loss or, take profit. So it's like an invisible radar that's there in the market. And because a lot of traders use it, so it works. Because what happens is that immediately there's a Fibonacci level, people start taking their profit. What happens to the market? It stops because people are taking profit.
Taking profit at that time.
So it reacts to that Fibonacci level because people are using it. For instance, it's difficult to find two aircrafts collide.
Yes,
it's happened before. I think I watched a documentary where two aircrafts collide. But it's very rare these days. You know why? All the pilots are using the same radar.
Okay.
Yeah, so they hardly collide. In the same way, if you're a trader and you know how to interpret the technical tools, because a lot of people are using it, you always learn to be on the right side of the market at the right time. So just like two pilots being on the right side, they will never be on the wrong side. Why? Because they're using the same radar. In the same way, because people are using that same radar, this Fibonacci levels, it helps them to take profits or put their stop losses, so that they're not on the wrong side of the market and expecting that price will keep going without turning.
Is there any other analysis tool that's very similar to the Fibonacci? Because I know we talked about the candlesticks. No, we talked about some other tools that
sure. And that tool that is very similar to Fibonacci is called the pivot point.
Pivot point.
Yeah, maybe when we finish Fibonacci, we'll go into pivot point.
Pivot point. So, okay, does it have any downside? What kind of downsides should investors or currency traders, watch out for while they're using it so they don't get too carried away?
The only downside there is, like every technical tool you're using, it's not something you rely on alone. You understand? You need other tools that you use also to analyze the market. For instance, you can use Fibonacci with moving average. Fibonacci, for instance, doesn't tell you that price is going up or coming down. It doesn't. All it tells you is where would price probably